What's going on, everyone? We're back with QuinnTalksMoney, and today we're going to talk about how you can save money to actually buy a house. The real estate market, as you know, is pretty wild at the moment. Lots of people are buying houses, rates are at an all-time low, and everyone is trying to figure out how they can actually buy their first home. Some people even trying to figure out how they can buy their second home, but it can be a really hard concept if this is your first time joining the real estate market. So in this video, we're going to break down why you should even consider buying a house versus renting, some of the things that a lender is going to look for, and also just ways that you can build up capital so you have enough in your bank account when you need to make a down payment, closing costs, moving, and everything else that comes with it. So stick around in this video. We're going to walk through all of that right here, and hopefully by the end of this, you'll have a great understanding to be able to make the decision for you in your situation if buying a house might make sense, and what steps you might have to take to get to that end goal. So thanks for being here. Before we get started, if you'd be so kind to hit that like button, hit the subscribe if you're new here. It helps me out a ton and I super appreciate it. So let's jump in right now. One of the first questions that we should even break down is why you should even consider buying a house versus renting. And for everyone's situation, this is going to be completely different. For some people, renting a house for their entire life is a perfectly good option. And for others, buying a house and actually building up equity in your property can also be a good decision for you. Certain things that might affect which option is better for you could be your income, how much you have saved, some of the risk you're willing to take, maybe if you have a family, your job history. There's lots of different factors that can go into that decision of buying versus renting. Now, renting is a pretty straightforward concept. It's pretty much a cost to you. So every month you have your base rent, maybe some utilities, maybe some renter's insurance or some parking fees. But other than that, you have a pretty good understanding of every month how much you're going to have to be paying to rent an apartment or rent a house. And there's not a whole lot of other costs associated with that. One of the benefits of renting is that you don't have to have a really hefty down payment at the start. You might have to have a small security deposit, but overall, the cost is just going to be that monthly payment that you have to pay with rent. And one of the other really important things to consider with renting is that a lot of times, if there's certain issues in the home or in the apartment that aren't your fault, the landlord is actually liable or will fix them at no cost to you. So when I was a renter and our faucet broke, the landlord came in 24 hours later, completely replaced the faucet, and there was no cost to me because it didn't break because of something that I had done. So that was something where me as a renter, I don't have to pay any extra cost towards that. The landlord completely handles that. So for a lot of people, that's just a really great peace of mind knowing that if something breaks in your home, the landlord's going to be around to fix it. Even though for some landlords it might take a lot longer than for others, but just knowing that you don't have to actually have the worry or the stress of replacing it on your own can be a really big benefit for a lot of renters. And now you might be saying, well, renting seems great. Why would I want to pay a down payment? Why would I want to pay for repairs when someone can actually just do it for me? But there's one really big reason that a lot of people want to buy homes, and it's something called equity. Now, equity is one of the main things that you're not going to get when you're actually renting a home. And equity is basically the amount of money or the value that you actually can recoup if you were to then go sell the asset or sell the house. When you buy a house, a lot of people think of it as an investment because it technically is. A house or a property that you might own is an asset that can appreciate in value over time. Over the past few years, home prices and property prices have seen a dramatic increase, which is leading a lot more people to want to buy homes because the money that you're actually investing in the home can grow. Whereas with renting, you're not really investing money. It's just a straight cost to you. So there's no appreciation of your rental value just because you live there. But when you own a home, the value of that home can actually appreciate, leading you to have more value when you actually go sell the home. So when you're renting the home, it's a complete cost, money out of your bank account, you're not getting it back. But with buying a home and with equity, this is where the money can actually eventually come back to you. So even though you might be paying $1,500 in your mortgage payment and the interest along with that, part of that money is actually going to be recouped by you, or maybe even will appreciate as the asset grows in value over time and when you actually go and sell that house to someone else when you're going to go move or whatever you might want to be doing with the house. So this is why renting versus buying can have its trade-offs, its pros and cons depending on what your personal situation is. Whereas renting is stress-free in the sense that you don't really have to worry about too much other than just paying your base rent, and a lot of the maintenance hopefully will be handled by your landlord. With buying a home, you get equity or you get value back, so when you actually sell the home, you might actually be able to recoup a lot of that money that you actually spent every month on your mortgage. But there are some other costs that you have to take into account, like property taxes or maybe higher home insurance costs. And even a lot of those repairs that if you're renting, your landlord might be taking care of, you now as the homeowner have to take care of those. So if your water heater goes out, you might be paying a couple $1,000s to get that replaced. or if a tree limb falls on your house, that's something else you might have to get repaired. With home insurance, some of these repairs and some of these issues that might occur could be covered, but it's not always guaranteed, and even some of those home insurance costs will have a premium that you have to pay as the homeowner. So it's just a bit of a trade-off for you to consider, where renting can be stress-free, sign a paper, move in, you're ready and good to go. Buying a home can be a little bit more complex, can have some more upfront costs associated with it, but over the long run, you'll hopefully be able to recoup a lot of those costs when you actually go sell the asset and when it appreciates on the market and gains value. So let's say you've decided you want to buy a home. Congratulations, that's amazing. I'm so happy for you. But there's a couple other things other than just saving up money that you have to be aware of to actually go through the process of buying a home and getting a loan. The lender is basically going to look through a few things to make sure you're a reputable buyer and able to pay back the loan over the length of the term. One of the main things that they're going to look at first is your credit score. Your credit score is basically your history of paying back debt. And this is a really important factor so that when they're lending you money, they're able to determine how likely you are to repay that loan. Now, credit scores have their own issues in many ways, but you being able to show a history of paying off your credit card bills on time or your student loans, whatever it might be, can really help you to gain reputability and trust with a lender, which sometimes can reduce your rate as well, which then will reduce your costs. Number two that a lender is going to look at is your job history. They want to see that you had a steady source of income over a couple years. Usually it's about 2, but they could look a little bit longer than that as well. They basically just want to see that you've had a steady job, you've had a steady source of income that's going to be able to pay off the mortgage payment and also the interest associated with that. And one other thing they're going to look at, number 3, is your bank statements. They want to see how much money is actually going in and out of your accounts every month. They want to make sure that you're not getting any huge gifts from people or that certain money is not being taken out of your account every month. So they want to see like how much money you have in your reserves, how much money you have in a savings account, and just make sure that you're not doing any laundering or any illegal activity with lots of cash deposits and withdrawals every month on a frequent basis as well. So it just helps them get a baseline of how you're actually cash flowing, what money is going in and out of your accounts every single month. So how much should you actually be saving up and have in your bank account right now if you find that dream house that you want to buy? So that's what we're going to talk about right now. Depending on where you live, the average price of a home is going to vary greatly, but across the United States, the average price of a home is $295,000. Again, every situation is going to be completely different. No matter where you are in the country, there's probably really expensive houses and relatively affordable houses as well, but $295,000 is kind of the baseline that we're going to use for these examples and talking about the down payment. Usually the industry average is about 20% of the price of the home for a down payment that a lender is going to look for to give you the best rate on the home or the best mortgage rate. However, you can also have situations where maybe you're paying 10%, or there are some situations as well if you're a veteran where you can pay 3.5% to 5% on your loan as well. It really is just going to depend on those situations you have. And all of those options are going to have slightly different fees associated with them for the loan as well, which we won't break down too much in this video. But if you're going to go from 20% down to 10%, a lot of lenders are going to require you to have mortgage insurance, which is allowing the lender to take on a little bit less risk since you're putting less risk into the home by only paying 10% compared to 20%. Putting that into perspective, if we use the $295,000 average home cost in the US, a 20% down payment is going to be about $60,000. And that's why some of these savings ideas that we're going to go through shortly can help you to reach that amount. You're also going to need to factor in closing costs. And these are costs that are paid out to your lender in terms of underwriting your loan. It could be for inspections. It could be for actually appraising your house and seeing what the value is as well. Usually these come out to about 1% to 3% of the loan. It really depends on who your lender is, and that's why it's important to shop around for different lenders. But 1% to 3% of the loan is usually what closing costs will come in at. And then don't forget about moving costs and also furniture as well, especially if you're buying a house that's bigger than the one that you currently live in. Furniture can be an unexpected expense that a lot of people don't think about before they actually go and purchase a larger home, is that you probably need to buy a couch or a bed for the extra bedroom that you now have, and a lot of those costs can add up as well. But usually we see for furniture and moving costs, the industry recommendation to put aside is about 2% to 3% of the home's value as well. So totaling that all up to see how much of the home's value you're going to need to save up beforehand to buy a home, we get to about 15% to 30% depending on how much you're going to put down. So that's just a good baseline when you're thinking about how much you currently have saved, how long your trajectory is to continue saving before you buy a home, 15 to 30% is usually a general range to think about how much money you're going to need to actually complete the purchase of a home and actually move into it as well. So let's talk about, if you are thinking of purchasing a home, how you can actually start setting money aside in a savings account, building that wealth so that when you see that dream house, you're ready to actually purchase it. One of the first things you should really focus on is just your mindset. It's such a simple thing, but it's also a really difficult thing to actually manage over a long-term period. But just starting to get into the mindset of, I need to save to buy a home. Where can I actually find more money that maybe I don't need to be spending on a month-to-month basis? Put that into a savings account to start building wealth and building the amount of money that I have for a down payment is a really important step. And I fully recommend focusing on that before you actually put into action any of the next steps that we're going to talk about. Otherwise, you might get burnt out when you're actually starting to save, and you might actually lose focus and not actually achieve the goals that you set out for yourself. Now that you've changed your mindset, the next thing to do is start jumping in and figuring out where your money's going. And the really important thing here is figuring out what your cash flow is. So imagine yourself like a business. I've talked about this on a couple other videos, but think of yourself as a business with revenue and expenses. The revenue is the money you make from your job. The expenses is everything you're paying for housing, food, entertainment, whatever else it might be. And it's really important for you to wrap your head using certain systems. There's like Mint, Personal Capital, You Need a Budget. There's lots of online options for you to actually put in your bank account, put in your credit cards, and it can kind of start tracking and categorizing where you're spending money. But this would be a really important next step to see. Every month, maybe you're spending an extra $100 at coffee shops that you don't need to be spending. Or maybe you're spending money on subscriptions that you don't actually use anymore. So this is a really good way for you to start visualizing where your money's going on a month-to-month basis and be able to make certain decisions or adjustments so that you can actually move money from one area into your savings account to start building up that down payment that you need to buy the house. And one other thing that I like to do for savings is just automating the money that's going from my checking account into my savings account. So every time I get paid for work, I have money that automatically will get transferred into my savings account. I don't ever have to see it. And this makes it really easy for me to just automatically put money into a savings account, and I don't even have to consider or maybe be tempted to go spend it somewhere else. It's already in the savings account, and now I'm not going to touch it. And the other thing would just be potentially finding other sources of income. So maybe you have a full-time job right now, and there's some skills that you have as a side hustle that you can do to earn a couple $100s per week extra. Or maybe there's some side job you can do with your neighbors, go mow your neighbor's lawn, whatever it might be as well. I've got another video that talks about other ways that you can think about making side hustles or extra income on the side as well. And that's something I'd recommend too. But if you just have no other way to cut expenses, then you just need to go make more money, and you need to find other ways to generate more income for you. If I can say anything, it would just be to be relatively open-minded and patient with this process. Know that things might change. Look for research online and different ways that you can generate income and also potentially cut certain expenses, but also just have fun with the process. Buying a home for a lot of people can be a huge milestone, so if that's you, just remember to enjoy the process and have fun doing it. If there's anything that I missed in this video, please feel free to let me know in the comments. Let me know your thoughts about other ways that you can save or reduce expenses, and I'd also love to hear what your view is on renting versus buying as well. Thanks so much for being here. If you could do me a great favor and like this video and subscribe, it seriously helps me out so much. I appreciate you being here, and I'll see you next time on Quinn Talks Money.